Larry Summers warns dollar reversal could bring inflationary pressure, posing challenge for Fed. Bitcoin speculation is mounting over when the Federal Reserve might pivot dovish. But economists, including Summers, warn any such move might lead to weakness in the US dollar versus other global currencies, in turn driving up prices for imports. This year's strength of the dollar has been a key factor in keeping elevated US inflation from rising even faster. Federal Reserve officials, meeting behind closed doors this week in Washington, D.C., have been far more focused on why consumer prices are rising than forces that might mitigate the pain. But if global currency markets were to turn, Fed officials might get a rude awakening because a falling dollar puts a new and unwelcome source of upward pressure on inflation. The foreign exchange factor could also represent a new threat to prices for risky assets, from stocks to Bitcoin. Because of the strong dollar, U.S. imports have become cheaper, in turn benefiting U.S. consumers. And that's a big deal, because the U.S. is by far the biggest importer in the world, with a trade deficit of $67.4 billion in August alone. A government-produced index of U.S. import prices, excluding food and fuel, has fallen by 1.8% since April, even with the main inflation rate close to a four-decade high, currently above 8%. Industrial supplies, building materials and non-electrical machinery all got cheaper to import in September, according to the Labor Department. So it stands to reason that if other currencies were to start, follow the URL for the full article. For more on this story, visit the news article link.